Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the first bullish scenario where we are looking for a 5-wave leading diagonal to the upside, after which we want to see a bigger 3-wave down and another leg to the upside to take out the high of wave 5. In this scenario, all of these subwave structures of wave 1, 2, 3, 4 and wave 5 should be 3-wave zigzag family structures. Preferably, your wave 3 is not going to move above this orange line. This is the 1-to-1 trend-based subextension taken from the start to the end of wave 1 to the end of wave 2, sitting at 61.1k. The reason is that preferably wave 3 is shorter than wave 1. The moment wave 3 is longer than wave 1 and passes this orange line at 61.1k, it reduces the probabilities for this scenario. It is, however, not an invalidation. What is an invalidation is the red 1-to-1 here on my chart at 57.2k. This is also a trend-based subextension taken from the start to the end of 2 to the current high on the chart. Wave 4 is not allowed to be longer than wave 2 in price. Now, of course, after 4, we then look for a 3-wave up in 5 retracement continuation as explained. If price does move above this orange 1-to-1 at 61.1k, the probabilities increase for an impulse to the upside. Here you can see a triple 1-2, 1-2, 1-2, 1-2, look for wave 3, 4, 5, 4, 5, 4, 5. Now this is the most bullish scenario. You also can count a double 1-2, 1-2, 1-2, and then a 3, 4, 5, 4, 5. So that would be like your quote-unquote worst case scenario, having 2 ranges over here and 2 more pushes to the upside instead of a 3-wave force and 3 more pushes to the upside. The invalidation of this scenario is taking out the low here at 57.3k. Now what you do like to see in an impulse is the highest amount of volume in your wave 3. And you can see that currently here on the 1-hour chart, the highest amount of volume of the current uptrend here is in the latest move towards the upside, and that is also what you like to see. Now that means that if we are in an impulse, first of all, of course, we like to hit the orange line, but then also we want to see price creating a wave 4, 5, and then some more 4, 5s. The invalidation of this scenario would be wave 4 hitting the 0.618 that you take from the current low to the high, currently sitting at 58.5k. The bearish scenario is a 3-wave structure to the upside labeled as a WXY double zigzag. Here we then have a 3-wave structure in W, in X, and look for another ABC to the upside in a wave Y. In this scenario, price is looking for a 5-wave structure in wave C to finish wave Y. Now the most common target for your wave is C is between the 1 and the 1.236 trend-based subextension taken from the low to the high of A to the low of your wave B, which is where we are at the moment. But you can also see that the common target for your wave Y, which is the higher degree count, is actually still a little bit higher, between 61.1k and 62.4k. And also, inside this area, you still have a target for wave C being 61.3k, so preferably price still moves a little bit higher. The 1.618 is an uncommon target for wave Y at 64.5k. Now what is interesting about the current price action here, if we go to a 4-hour chart, also in confluence with the bearish scenario, is that the value area high of this volume profile over here is inside the target area for your wave Y. Now if I remove this scenario and only toggle on the volume profile, then you can see it is a nicely respected volume profile. Resistance over here, bit of a move outside of the volume area, then we move to the downside, bit of support, another deviation, come back in, value area low, retested, and now at the point of control. Now you can see that the latest 4-hour candle closed above the point of control. It is important for this current 4-hour candle to stay above the point of control, preferably to increase the probabilities to move to the value area high. The value area high is sitting at 61.5k, which is in confluence with the blue box here because we have some more resistance there, 61.4k to 61.9k. Currently, we are in this blue box. As you can see, there is more resistance than just the point of control, including a daily naked point of control at 61.25, just above the current price action. If we look at the CVD divergences, then all of the bullish local CVD divergences have now played out. The only one remaining on the 4-hour time frame is the bigger bullish CVD divergence here, with the target being 65k. Initially, as price was moving to the downside, this bullish CVD divergence is not interesting. But as explained the past week, when price was moving to the upside with increasing bullish CVD divergences on the 1-hour and 4-hour time frame, it does increase the probability slowly for this bigger bullish CVD divergence on the 4-hour with the target at 65. Of course, we do like market structure locally to continue with bullish CVD divergences. As price is currently moving up on volume, the recommendation generally from an Elliott wave point of view is to wait for another range to form, because another range will give us all the information that we need, including information about new CVD divergences. And if we then look at the probabilities of the different scenarios, then on the 1-hour time frame, the probabilities at the moment are higher to still look for higher prices, as pretty much all of the scenarios show. In the diagonal, we're looking for a 3, 4 and another 5. In the impulse, naturally, you're looking for price to continue. And in the bearish scenario, you preferably hit the target area for a wave Y as well, which is also what I talk about over here. In the bearish scenario, the one that's on my chart right now, we hit the wave C common target area, which is the white box over here. So it is important to keep an eye on the current range that is forming here. But the wave Y common target area in yellow is higher and interestingly in confluence with the range value area high. Depending on where price starts to create a range / a retracement, we get a better idea of what exact scenario we are looking at. Now, bears need to move price below this low over here to increase the probabilities for bearish scenarios. So 57.3k is important for the bears. As price is moving up on volume, the best is to wait for a long range to form. Of course, not financial advice, but from an Elliott wave point of view, the magic is in the ranges. That is where you can get a good idea for the probabilities. That new range will then give us all the info that we need. Currently, we are at obvious resistance, so it is important for management and observation. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.